Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about UNIVEST Financial CORP quarterly report. UNIVEST Financial Corporation offers a wide range of businesses and services through its three segments: banking, wealth management, and insurance. The company's banking services include deposit taking, loan origination and servicing, mortgage banking, equipment lease financing, and general banking services for individuals, businesses, municipalities, and nonprofit organizations. In addition to banking services, the company provides wealth management services such as investment advisory, financial planning, trust and brokerage services for private families, municipal pension plans, retirement plans, trusts, and guardianships. The insurance segment offers full-service insurance brokerage agency services, including commercial property and casualty insurance, employee benefit solutions, personal insurance lines, and human resources consulting services. Overall, UNIVEST Financial Corporation provides a comprehensive suite of financial services to its customers through its banking, wealth management, and insurance segments. The recent increase in UNIVEST Financial Corporation's UVSB stock price can be attributed to several factors. The company has consistently reported strong quarterly financial results, exceeding analyst estimates in each quarter of 2025. Notable highlights include a 15.3% year-over-year increase in net interest income and a 9.7% rise in total deposits in the third quarter of 2025. Additionally, UNIVEST's strategic capital management initiatives have contributed to its stock price growth. The company has increased its quarterly dividend by 4.8% and repurchased over 1 million shares of common stock in 2024. These moves demonstrate the corporation's commitment to returning value to shareholders while also maintaining a stable asset quality. The overall positive trend in UNIVEST Financial Corp's stock price is supported by the company's strong financial performance, strategic initiatives, and growth in key metrics such as net interest income, loans, and deposits. The primary drivers of revenue growth or decline can be summarized into three key areas: net interest income, loan growth, and non-interest income. Net interest income saw a significant increase of $2.4 million, 3.1%, due to higher interest and fees on loans and investment securities. This growth was driven by the banking segment's 200% increase in interest income and the wealth management segment's 361% non-interest income growth. Loan growth also contributed to revenue growth, with total loans increasing by $123.8 million, 6.1%, as of September 30, 2025. Non-interest income saw a modest increase of $0.6 million, 1.9%, driven by growth in trust fee income and insurance commission and fee income. Overall, the banking segment's significant interest income growth and non-interest income growth drove revenue expansion, while loan growth provided additional support to revenue growth. Net income and profit margins overview. The company's financial performance has shown a mixed trend over the 9 months ended September 30, 2025. Net income increased by $11,022 compared to the same period last year, driven primarily by higher net interest income after provision for credit losses, which rose by $16,979. However, non-interest income decreased by -$944. Profit margins have also undergone a change. The consolidated net income margin remained relatively stable at 30.6% in 2025 compared to 30.7% in 2024. In contrast, the banking segment's profit margins increased significantly from 2.33% to 4.69%, while the wealth management segment's profit margins also rose from 1.95% to 4.69%. The reasons behind these changes are attributed to higher loan yields and increased loan balances, which contributed to higher net interest income. Additionally, a reduction in cost of funds has also positively impacted the company's financial performance. The company's financial performance indicates a significant improvement in its ability to generate cash. The operating cash flow has been consistently positive over the past 2 years, with an increase of $23,780 from 2024 to 2025. This upward trend suggests that the company is effectively managing its operations and generating sufficient cash to support its growth. The company's debt level and interest expenses have undergone significant changes. Notably, long-term debt decreased by $25,000 from $225,000 to $200,000, while subordinated notes also saw a decrease of $19,664. However, total liabilities increased by $399,281. The net cash provided by financing activities showed an increase from $363,089 to $376,191. In terms of interest expenses, there was a notable decrease in 2025, with total interest expense dropping from $53,234 to $48,324. Interest on long-term debt and subordinated notes also decreased, from $5,063 to $4,705. Conversely, interest income increased by $753, 3 months, and $14,250, 9 months. Overall, the company's interest expenses have seen a downward trend, while its debt level has experienced mixed changes. The company's financial performance reveals a mixed picture across its various segments. The banking segment stood out as a strong performer, with notable increases in interest income and net interest income, contributing to a total revenue of $72,322. In contrast, the wealth management and other segments struggled, with the former recording a net loss of $1,688 and negative net capital expenditures, while the latter incurred a net loss of $2,899 and negative net capital expenditures. The insurance segment showed some resilience, generating non-interest income of $5,476 and total revenue of $5,476. Overall, these results suggest that the banking segment was the clear winner in terms of financial performance, while the wealth management and other segments require improvement to meet expectations. Management is emphasizing the company's financial stability and growth prospects. They highlight the adoption of new accounting standards as having no material impact on their financial statements, indicating confidence in their financial reporting. Additionally, they focus on maintaining a strong net interest margin, aiming to achieve a ratio of 3.15%. This suggests that management is prioritizing financial performance and stability in their strategy. The company's financial summary reveals that it has engaged in 2 key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, as indicated by the declaration and payment of cash dividends on pages 7 and 8 respectively. Secondly, the company has also bought back shares from the market, with evidence provided on pages 72 and 77 confirming this activity. That concludes the financial summary for UNIVEST Financial CORP. Feel free to comment below, and I will be happy to answer them when possible.